Gold traded with a swing yesterday, reversing from the resistance zone at 2035.36 as you have discussed, and 2020 on the downside proven out to be a great support for gold. Now, what to expect today? Can we expect it to continue with the bullish bias again, or there is a possibility of a reversal and a drop? What is going to be our strategy in order to profit trading gold today? We will see with the help of charts and indicators. Do like, share, subscribe, and comment. Do press the bell icon in order to get twice a day updates and notifications. The next update will be released before the US session. Watch that is. Let's start first to look into hourly charts. And yes, if you have not joined the channel memberships, join the channel memberships and support the effort. Now, look at the hourly charts here. See, first of all, here you can see good waves. It is again come back to the support levels from the 100 period moving average. The next is 2020 levels proving out to be a great support. I have always mentioned 2018, 2020 first support zone, then 2014, 2015. If these two levels are taken, then you can treat gold as bearish. Now, what has happened on the hourly charts? Moving averages have started to converge. It is not yet crossed over. The next observation here is look at the formation here, highs, lows, first wave. Now see, it has to break certainly 2018, 2020, which is definitely a greater support zone. Now retracement, and if it reverses and drops below 2024, that is the one point where you can initiate a selling entry. But this has to be with slight caution, as 2018, 2020 numbers are to be breached in order to confirm the bearishness today. If you look at the stochastic, this has dropped. The MACD has crossed over, trading with divergence. This suggests that possibly we may look forward to a fever green candles from here, rise, retracement, and now it has crossed over again. Let's see if it continues to diverge. RSI flat coming to 2 hour. Likewise on the 2 hour charts, double bottom reversal sign, a rise here. We have to wait for it to break below this zone, that is 2020, 2018. Also, if you look at the 2 hour charts, there are good supports observed at around 2022 levels. So rather than selling at 2024, you have to wait for 2022 and then 2018 zone to be breached. Stochastic near to overbought. MACD is trading bearish. It is not yet converged. It is still looking downwards. RSI flat coming to 3 hour. Likewise on the 3 hour chart, the drop here, the retracement consolidation going on as now. Also, one must observe this is a flat bottom and higher highs are observed here. Thus, if it stays above 2030 levels, you can initiate a buying entry here. But then 2035, 36 first resistance, and then beyond that, we can look forward to 40, 42 levels. Only and only if gold trades about 20, 40, 42, you should treat this as bullish, else it is bound to drop again. Stochastic is rising, MACD is bearish here, it is trading with little divergence. RSI is almost flat here. Coming to 4 hour charts, look at the 4 hour charts, the sharp drop, double bottom, and then this retracement. It is under retracement as of now, not reversal, but retracement. Yes, look at the drop was sharp and the rise is gradual. This suggests that it is under retracement. This also suggests that the bullish confirmation is only if it breaks beyond yesterday's high, that is 2035, 36. The next observation here on the 4 hour charts, look at these three candles. Either the candle has closed here or it has started at the same levels. This means 2023, 2022 should be a very good support. Also, the crossover in the moving averages suggests a sign of bullishness here. If you look at the stochastic, this is also rising, and but only thing is the MACD, which is crossed over, it is trading with divergence. It is trading bearish. See, it has seen a good rise. Now it is looking downwards, and this indicates the probability for it to trade bearish. Let's see if it continues to diverge more. RSI comfortable. Coming to the daily. Before we look into daily charts, if you want to learn this art of trading, be a part of my 29th mentorship batch commencing on 4th of March. Limited seats available. Register yourself. Equip yourself with the tools, strategies, and the trade setups, the most important part, which helps you trade profit. Diverse set of instruments across indices, commodity, currency as well. Yes, reach out to me for more details. Also, you can be part of my signals channel on Telegram if you just want to trade as per the signals. Again, for any of your queries, you can write an email or you can ping me on Telegram. The contact details are mentioned in the channel and video description. Also, if you just want to consult and want to get the market information, you can visit my platform www.forexonline.com, and also do join the free Telegram channel for live market update. Now look at the daily charts here. See, first of all, on the daily charts, it is being trading higher highs. Highs are beautifully aligned. The lows are also beautifully aligned. This also suggests how important it is for gold to break below 2018, 2020 zone, because below this a certainly sharper drop can be expected, which can take the prices towards 2014, 15 as the first support, and then 28, 2010 as the next. Next thing you should notice is, see, drop, retracement, drop, retracement, drop, retracement, and it is consistently trading in this bearish channel here. Where are the highs of this channel? Around 20, 40, 42. It is very important for gold to break beyond 20, 40, 42 in order to confirm further rise. Now, also one must notice what has happened yesterday. Higher highs are seen, lower lows are seen. Almost it is at the pivot levels, which is at around 2027 levels, 2028 levels. There's one probability for gold. Yes, those who want to risk a little can buy at 28 levels, 2028 levels. But then you have to be very cautious and alert 20, 30, 32 zone again, first resistance, and then beyond that 20, 35, 36. If these two levels are taken, then it is going to hit 20, 40, 42 levels. That is for sure. So a buy entry at 2028, it is going to be slightly riskier. Thus, you need to be you need to trail your stop losses with just 20 pips of trailing SL. On the downside, a selling entry at 2022 can be taken, but again, it is riskier as 2020, 2018 is going to be the first support zone, only below which you can consider that the bears will take over. Take your trades accordingly, below which 2014, 2015 and 28, 2010 levels should be the greater support zone, below which it is going to fall sharply. Take your positions accordingly. Now, do like, share, subscribe, and comment. Do press the bell icon. Join my mentorship batch webinar series Signals channel. Reach out to me for any of your queries. See you again before the US session update was that as well. Thank you very much. Have a great profitable trading day ahead. Thank you.